En este momento los invitamos a abordar un tema muy crucial y muy importante, el cual es financiamiento de proyectos de GNL a cargo de Sergio Chapa.
Hey guys, good to be back. Thank you everybody here for staying this late in the day. I know it's been a long and very informative day, but I'll try to make it worth your while here with an exciting presentation about funding trends for LNG projects and also contracts. All right, so let's get started. Okay, again, Poten and Partners. Most of the information you're going to be seeing in this presentation comes from our LNG finance publication that's published quarterly. It's a look at all the LNG projects around the world and how they're financed through debt, equity, bonds, every which ways, okay? Okay, so let's get started. Let me just do the agenda right now. I'm gonna start off talking about LNG funding this year, do a quick breakdown, start globally, then look at the United States. After that, we're going to look at contract prices that underpin those fundings. And then after that, we're going to take a look ahead in the future to see what future LNG contracts and prices look like. And then we're going to finish with final investment decisions, what we expect to see over the next 12 months. So you'll want to stick around for that. Okay. So getting started, here's a look at LNG funding in 2023, and this is across all sectors across the world. We're talking imports, exports, bunkering, everything. As you can see here, 2023 is pacing to be a record year for LNG funding, almost approaching $60 billion with so far that goes through this year. And we're not done yet. At Poten and Partners, we're expecting at least 2 more FIDs by the end of the year, and they'll come from North America. Okay, let's go to the next. Now this is where things start to get interesting for us. Now if you just take a look at the United States and the breakdown of LNG funding for U.S. liquefaction export projects, you see this year more than $45 billion of financing for export projects. Now, $35 billion of that comes through bonds and bank debt, okay? But you see something also really important happening here. If you look at that kind of blue, right below the orange, that blue one, that blue color, that's equity. That's equity partners and equity offtake in LNG projects. Now, one of the things that we're seeing, especially this year, is the growing importance of you getting equity for your project to get it to reach FID. We had 3 projects reach FID in the United States this year. Plaquemines Phase 2, Port Arthur LNG of Sempra, and also next decade's Rio Grande LNG. Now, Venture Global and Plaquemines just took out bank debt. They had their own sources of cash that they could use to put towards the project as their own equity. That's the orange you see there. But then you see that Port Arthur and Rio Grande needed to have equity partners to get their projects across the finish line. And equity partners there are advantages and disadvantages. One, if you have equity partners contributing to a project, you don't need to take out as much bank debt, and that's a good thing. However, with that reduced bank debt, now you owe your equity partners the money before you pay your shareholders and your cash flow, so you see less cash flow from your project because that cash flow is diverted to the equity partners. And that's an important trend that we're paying attention to. Okay. So what underpins all this funding, all this equity activity, all this debt activity is LNG contracts. And I think that's what we're all here to learn a little bit more about this afternoon. Okay, so if you look at LNG contracts globally, you see the growing importance of Henry Hub linked contracts. Those are contracts from the United States linked to the Henry Hub Index in Louisiana. And also, right after that, you see Brent-linked contracts. Those are contracts linked to the price of Brent crude oil, usually taken at a percentage. What we see in 2022, following the Russian invasion of Ukraine, is a flurry of LNG deals signed for energy security purposes around the world. The majority of those deals were Henry Hub deals, followed by Brent-linked deals. Okay. And so, make sure, okay, good. Okay, just gonna start with Brent-linked deals. Back in the old days, you saw Brent-linked contracts maybe at 10, 11, 12-ish percent. So 12%, if the price of Brent crude oil is $100, you're paying $10 for your LNG. And, but what we saw after the Russian invasion of Ukraine and the rising demand for LNG is that Brent-linked price contracts went up. And they crossed the 14% line, as you can see in this chart. And they went even more expensive, as high as 20% of Brent for short-term contracts. Now, those are contracts that are perhaps 5 to 10 years in length. Since the initial shock, prices have come down to about the 14% range. That's what we see for Brent-linked prices currently. We've also seen similar price increases in the United States for Henry Hub prices. Back in, I'd say, during the pandemic and before the Russian invasion, you saw U.S. LNG deals selling liquefaction fees for $2 or less. Those days are over. They're gone now. In the post-Ukraine world that we live in. Also, one of the driving factors is that to get all this financing that we showed earlier, banks want to see liquefaction fees as close as you can get to $2.50 per MMBTU. So that's been a driving factor up. So we're seeing the LNG contract signed for U.S. LNG, we're seeing them approaching $2.50. And it's really accelerated over the last year. It is really important to note, though, however, that's for 20-year deals. If you're going to get a 20-year deal in the United States, you could get it for perhaps $2.50 or less. But if you want to go shorter, if you want to go 15 years or 10 years, you're going to have to pay more. If you want to sign a 15-year deal with the U.S. LNG developer, you're going to pay 20 to 30 cents more for your natural gas per MMBTU. And if you sign a 10-year deal or less, that price increases by 70 cents for your gas. And of course, there are some exceptions. That's the previous slide was Henry Hub, FOB, free on board delivery. But if you sign a contract where it's DES, where the destination is fixed and the carrier is fixed, you're going to pay more for your U.S. LNG. It's going to be $3 or more liquefaction fee. And one of the things that we've noticed, too, is that deals in Mexico are structured a little bit differently than those in the United States. For a lot of these proposed LNG export projects in Mexico, usually in the United States, it's Henry Hub plus the fee, and that's the cost of your gas. Well, in Mexico, it's a little bit different. It could be either Henry Hub or it could be Waha, and then you add your liquefaction fee, and then you add a pipeline fee on top of that. Either way, it's still, as you can see here, it's still rather competitive with the U.S. Gulf Coast. And that's why some of those Mexican projects are attracting so much attention right now. Okay. So, given that environment, I think some people mentioned earlier that there are a number of contracts expiring, LNG contracts expiring on the market, including some in Latin America over the next 3 years, significant volumes. Now, that's both an opportunity and a risk. Depending on the term that you're looking to secure supply, you could be paying more or you could get a bargain. It just depends on what side of the deal you end up on or who you buy from. I'll get more into that right here. Okay, yeah, here we go. So when I said it depends, you could buy LNG directly from a project or a developer. Or, as many of you know, you could buy it from an aggregator or a trader, you know, a portfolio player. If you look at the breakdown of the contracts signed by buyer type, you see it heavily weighted in favor of the aggregators last year. And that's fueled a lot of the FIDs this year. And so what happens now, if you look at the other chart, if you're a portfolio player, an aggregator, and you just signed a 20-year deal with the US, guess what? Now you need to find a home for it somewhere else at an end market. And you need to sign a deal that supports the deal that you just signed. So we see the activity signing here with the United States, and on the other side, we see what happens after those deals are signed. You see right now low activity of the aggregators and the portfolio players. Haven't signed so many deals yet with their end customers. But we're expecting that to happen over the next 12 months. Okay, let me go right here. Okay, so again, we're seeing a trend in the United States to deal making, favoring the U.S., favoring Henry Hub contracts. If you look at the number of years signed, again, what the banks want to see to fund projects is 20-year contracts with creditworthy counterparties. And so you're seeing that heavily on the graph on the right. You can see that is indeed happening. You see the majority of the deals there were for terms between more than 15 to 20 years. And we expect that to continue for U.S. LNG projects. Again, aggregators sign a 20-year deal, and then they turn around to sell to other customers. Now here's, I know that's small, but I believe we'll be making a copy of the presentation available, so you can look at it in greater detail later. This is one of the slides we did for our presentation or webinar a couple months ago, and it's a project-by-project look at each train and who's buying what volumes from each train in the U.S. And you can see all the volumes taken up for Calcasieu Pass, Corpus Christi Stage 3, Golden Pass, completely sold out. You see Plaquemines there, and then Port Arthur. Now, where it gets interesting here is in the second to last one, Venture Global's CP2 project. It's already pretty much halfway sold out. And CP2 is one that we're watching closely. That project still needs its FERC permit before it can proceed to FID. We believe that once, the company has said that once they get that permit, that they'll be able to quickly proceed to FID. And we believe them. But the thing is, the FERC permit for CP2 isn't expected until November, so that's one to watch. And then if you look here at the last and final one, Rio Grande LNG, next decade's project, phase 1, reached FID this year. And that leaves a gap for trains 4 and 5 for a phase 2. Some of the, for instance, Total Energies and other equity partners have rights to those trains. That means that they have to sell a smaller volume. All right. Okay. Now this is something that we put together. FID Watch. Roughly 22 projects and 178 MTPA in the queue from North America. That's the United States, Canada, and Mexico. We've gone through and we've looked at each project, how much they've sold versus and how much they have left to go, and then we've taken when from statements that they've made when they expect to reach FID. Right now, the next one, the most immediate one that we're watching most carefully to go to FID is Delphin LNG, which is an offshore project in Louisiana. And the company has said that they will try to reach FID this month. And the next one after that we're watching closely is Cedar LNG in Canada, on the west coast of Canada. That's another small project, only 3 MTPA, but it's supported by MOUs and has, and they're looking to build a FLNG offshore and export from the shore. After that, in the first quarter of 2024, in the next 6 months, really, we expect to see FIDs from Commonwealth LNG in Louisiana and also Mexico Pacific Limited in the coastal state of Sonora. And then after that, we're expecting to see, again, like I mentioned in the previous slide, Venture Global CP2 project in Louisiana, Calcasieu Pass 2. But again, they need that permit before they can move forward. Going beyond that, there are other projects that could go forward, but they're, asterisk, kind of contingent on certain things happening. CP2 depends on being able to obtain that FERC permit before they can move forward. And then Lake Charles LNG, Energy Transfers Project in Louisiana, requires a renewed or an extended non-FTA permit from the Department of Energy. And as soon as they can do that, they could also proceed forward with an FID pretty quickly. There are some risks to that. I'm sure some of y'all have kept following the news out of the United States. We avoided a government shutdown, which would have affected FERC and the DOE. We've managed to postpone that for 45 days until mid-November. We'll have to see what comes again in mid-November before we have to enter that debate again and deal with that uncertainty. But for now, the agencies remain open, processing applications and taking public comments. And then I think that's about it, standing between us and happy hour, guys. I think we made it. We did it to the end of the day. We made it. Thank you.